Not to brag or anything, but I'm kind of an investing genius, especially when you look into my portfolio. You see, month to date, I'm down $34,000, almost 10%. Wow, okay, maybe it's time to rename my YouTube channel. But hey, it is what it is. And as always, very transparently in this video, I want to go through my monthly portfolio update. There's only one more trading day left in this month because today is actually Thanksgiving in the US, so markets are closed. So only tomorrow. So I thought I'll do this a little bit earlier as I planned another video already on Sunday. So yeah, let's go through one by one and see why this major dip in my portfolio. But I guess most likely if you're watching this video, you might have also seen a few red numbers in your portfolio. But as you know me, if you've been watching my videos before, to be honest, I mean, yes, it's painful to see that, but actually in the grand scheme of things, I don't really care because I'm a long-term investor. I'm not investing for 1 or 2 or 3 years. I'm really investing for 10, 20, 30 years to the future. So this is just a little blip along my long-term investing journey. And that's when I always change my time frame also. And I click to all, and you see here all of a sudden I'm in the plus $83,000, which of course sounds significantly nicer, even though it did take a dip as it was already significantly over 100,000 not so long ago. But again, it is what it is, and these things will always happen, right? Nothing only ever goes up. That's pretty normal and natural when you invest. And obviously, this is my combined portfolio. You see here all my various holdings across interactive brokers, eToro, what I'm using, Trading 212, some funds on Ledger as well. I use also Nexo as well to earn some interest on my cryptocurrency. I'll speak about this in a moment. Then we have XTB also, which I recently started. Crypto.com, I'm about to close that account. I don't like it anymore, but it's just locked up for a few more months, and then I'll pull my funds over there. And that's all I have over here. I also have some other holdings in P2P. I'll show you that in a second. On Snowball Analytics, another portfolio tracker that I'm using. I'm using right now 2. This is Delta by eToro, and another one is Snowball Analytics. I think both of them are great. Both of them have their strengths and weakness in certain areas. So for now, I'm using both, but either of them could be great options for you to use. So yeah, when we go through, obviously you see here the biggest drop came from one individual asset class because all the rest are actually pretty much in the plus for the month. And I'm really comparing month over month. It's more apple to apple, right? Because otherwise, if you do year to date, it's not really as clear. And yeah, if I go back over here, I started the month with 342,000 and now down to 316,000. And during the month, I invest every single week, quite a bit of money, to be honest. It's even more painful when you put additional money and still your portfolio value goes down. The biggest drop came from cryptocurrency and especially Bitcoin. I'm a Bitcoin maximalist. That's my main investment holding that I have, and that dropped by almost $40,000. And obviously you wonder how low can it go? I was thinking when it dropped down to 100,000 that this would kind of be the cutoff, but then obviously we saw even further price drops. Then we hit 90,000. I thought, okay, 90,000, that's going to be the lowest it will go, and then it hit even below that. At some stage we're hitting as low as $85,000. And obviously there are a lot of factors behind that, right? Nobody knows the exact answer, but a lot of different factors are contributing towards that. On the one hand side, you have the boom towards AI. Everybody's rushing to AI to get into the stocks, into the companies. So a lot of capital and money is flowing into that, which means there's less capital flowing into the crypto markets, right? That's one. Then the general uncertainty. So a lot of people are flocking into safer investment havens, for example, gold. We've seen gold absolutely booming in recent times. I mean, month to date, we're up still 4%, and then year to date, up 58%. Absolutely crazy number for gold, actually. And then also you have liquidations, because unfortunately in crypto, a lot of people are using leverage. Basically, they use money that they don't have. They put maybe 1,000, 10,000, 100,000, whatever, but then they use a 10 to 1 or even 100 to 1 lever, meaning with $1,000, they could invest 10,000 or 100,000 worth of investments. So there's a multiplier, which is great if the stock goes into the direction you're betting on, but not so great if it goes against you, and then you can be wiped out completely. And that's what we call liquidations. And that happened a lot in Bitcoin, where people were liquidated, all the positions were closed, and that basically leads to selling pressure, right? Because then the exchange is selling, they're forced to sell position to close it and use those funds to cover the leverage position, basically. And that happens at certain trigger points, right? It happened at 100,000, happens at 90,000, because a lot of investors, when they make those leveraged trades, they put themselves a price floor where they say, if it goes below, it's highly unlikely to happen. That's my price floor. And often these are those round numbers. So if we break through them, all of a sudden you will see a major price drop. So that's something to keep in mind. And all those factors together obviously led to the decrease in price of Bitcoin. But again, long term, as I said, I don't really mind too much. I've been in crypto long enough to see those swings up and down. And actually, they became less volatile than they used to be. It used to be even bigger swings. So now a 20% swing for me is actually, not that bad. And I'm still staying invested. I'm not buying more, even though the prices are attractive, but I do want to accumulate more positions in my stocks. I'll come to this in a second. So for now, I'm just holding, watching for the sidelines, and I know that long term, my prices should be increasing and total portfolio value, therefore, accordingly. Then we come to my 2 ETFs. You can, by the way, filter very nice on the top left over here. You can check just for crypto or just stocks. But in this case, I want to talk about my ETFs. So we have the S&P 500 and my Nasdaq 100, and both of them pretty much flatline. Now, granted, I haven't invested into them for quite a while, so they pretty much flatline, which I'm okay with, because let's not forget, we have already seen a crazy rally in those ETFs for this year. I mean, the S&P 500, which should be boring, conservative, long-term investing, is up still, despite all this volatility in recent times, 16% for the year, which is actually really impressive, pretty much double than what it did historically, over the last 30 years, plus or minus 8 to 10% is what people assume the returns to be. So here, 16% is really high. And then the Nasdaq 100, which is of course much more tech focused, up almost 20%, really, really incredible. Of course, driven a lot by those strong tech companies, especially with a focus on AI and chips. They have done tremendously well this year. And while I want to increase those positions in the future, right now, I'm actually really investing heavily into 2 companies I have full conviction in. And one of them played out extremely well already. That's my most recent addition, which is Google. I wish I would have gotten in even earlier, but you can see even in the months where I'm really down a lot, Google actually saved me by 4,000. So if it wasn't for Google, I'd be down even more. So Google has done tremendously well, because for Google, I only started adding to it around summer this year. So I wish I would have gotten in even earlier, but even since then, with a fairly still small amount compared to some of my other holdings, I'm already up in 1 month 21%, which is crazy. Not so long ago, people were writing off Google, that search is going away, Google Chrome might be sold off, and the company is going down the hill. I mean, what a turnaround story. If you haven't tried Google Gemini 3 in recent times, I mean, it's so much better than ChatGPT in many things. Absolutely mind-boggling. So in terms of AI, they now seem to be the company to beat. Not only that, they also now have chips that they're apparently selling to the likes of Meta and others. So it's not only Nvidia anymore, but Google producing in partnership with other manufacturers, of course, their own chips. Absolutely crazy. Cloud business going strong, YouTube going strong, Waymo, the self-driving cars starting to expand globally as well. So many strong factors and momentum triggers that Google has, which gets me excited. So I'd like to buy more of it, even though in recent times, I mean, year to date, again, up 44%, kind of begs the question, are they potentially overvalued? Maybe not, because on a forward PE ratio, now they're around 29, which is actually not that expensive. So I still look at it. Right now, I haven't bought any, but I'd like to add to the position, because I really believe in those 2 companies. And the other one being, of course, Amazon, which I have full conviction in, made a few videos about the company. And again, this is not investment recommendations or anything. I'm just sharing my thoughts, what I'm doing with my money, and I would love this position to be even bigger. I really believe in Amazon long term. I mean, it's just such a behemoth. Whatever they enter, they usually dominate their respective niche. And if they don't, they will exit it and find another niche to dominate. And that's why I'm so excited about the company. Even if in terms of AI, the bubble burst, it doesn't work out, they have so many other legs to stand on. I mean, it's almost like a mini ETF if you want, right? Because there's so many business avenues and legs to stand on, which is something I love to invest in. Companies that are diversified, not just focusing on one thing. Like Netflix, for example, right? Great company, but they're quite focused on one thing, which is mostly entertainment. So I like this diversification. And in a way, I'm happy that so far the company hasn't really taken off. I mean, year to date, they're up only 5%, actually massively underperforming the S&P 500. So some people could say, well, Kai, it's been a bad investment. And well, objectively speaking, for the year, yeah, it hasn't been the best return. But again, I played the long-term game, and I really think that Amazon will still have its Google moment coming when they will launch something really, really new that gets people excited. And especially once they start cutting down even further on payroll, that will boost their profits so much. They start automating more and more with robots taking over a lot of human jobs, which of course, in a way is sad for employees, but for shareholders, I think we're going to see massive returns there in the future. So I'm quite bullish on this long term. So that's why I'm trying to accumulate more and more stocks before we really start taking off in terms of share price appreciation. With this, let's jump over to Snowball Analytics, which is the second portfolio tracker that I do use and can really recommend. You can see all my various holdings that I have, my different brokers. And here I also have my Bondora holdings. If I go into this, you can see basically it mimics exactly my Bondora Go and Grow account, where I basically earn 6% interest on my money paid out to me on a daily basis. And you can see in dividends alone for November, I'll be earning 84 euros. Really not too shabby just by having some funds over there. I hope to very soon be at 100 euros, but I'm pretty sure I'll get there if I forward to next year. Without any additions, you'll see I get there anyways eventually, but I'll continue to make more additions because 6% in the times we're in is actually really attractive. I feel very comfortable with Bondora. I've been with them for a while now, interviewed the CEO. So for me, it really works. You can see it's like clockwork, paid out to me every single day. And from here, I can very easily switch over to my total portfolio and show you the dividends I'll be receiving over there. And you can see for this year, it will be around $1,400. But if I move forward to 2026, it will be significantly more. at 2,100. And I think that number will only increase as I keep on growing my Bondora Go and Grow balance. Plus, obviously, I also get more dividends if I start buying again more S&P 500. You can see every quarter my dividend income spikes quite a bit. For example, in December, it will be significantly higher because I will get 2 dividend payments. One is from Google over here because yes, Google does pay a dividend. It's very small, but they do. You can see 0.26%. Nothing really exciting, but it still adds up over time. And of course, the biggest one being from my S&P 500 holding over here, which is around $200 or currently around 1%, which is also very little, right? So in general, I'm not a dividend investor. If you purely focus on dividends, that income could be significantly higher. If, for example, I took my entire portfolio value now of 337,000 times 5%, which is to be expected for a dividend investor, right? An average, I would say, is quite reasonable. I could have an annual dividend income of 16,850. Sounds much better, right, than my 2,000 something. But at the same time, usually the capital appreciation also tends to be much slower with dividend stocks than with growth stocks or ETFs that I'm investing in. That's why I look at total returns rather than just dividend returns. But both can work. And for some of you watching, including some dividends into your stocks might be a smart approach to get that passive regular income as well. And by the way, friends, if you want to see my entire portfolio updated in real time, check out the link in the description below or scan the QR code on the screen. Just enter your email and I'll send you a private link so you can track my portfolio in real time. And whenever I make any sales, see the updated total value. So in terms of passive income, obviously, as I said, I didn't get any real dividend payouts for the month of November, but I did get interest, for example, from Nexo, where I do keep some of my cryptocurrency. Right now, it comes to around $100 a month, which is not too bad, plus around $100 from Bondora and $250 on my cash holding that I'm keeping over here in the UAE in my WIO personal account, where I do get 6% interest on my money from a bank without any lockup, which is absolutely crazy. So yeah, in total, my passive income for the month came to $450, especially in the circumstances we're in. So overall, I'm really happy with this. And of course, my goal is to increase my Bondora holding so that this contribution will be even higher in the future. But at the same time, of course, I also have to make sure that my overall income and earnings increase, because now being back in Dubai, it is great and amazing, but usually it also means your spending increases, because if they're good at one thing is to get your money out of your wallet. Obviously, I really enjoy being here. It's sunny all day. Our newborn is over here. It's amazing. I absolutely love it. Back in my old studios, I really enjoy that. Well, they have, friends, a transparent update of my portfolio. It's been a rough month, but again, I don't actually mind at this stage anymore. In fact, I'm actually getting excited about this, right? Because as my portfolio grows, those swings will be even bigger. Not in percentage terms, but in monetary value. If one day my stocks and investment portfolio hits 1 million, which it will be, there's no questions about it. It's just a question of time. I'll get to 1 million. And then imagine a 10% swing in a month. That would mean my portfolio could be up or down by $100,000, which would be absolutely crazy, right? You want to focus on the long-term trajectory of your portfolio. And as I always say, in times like this, best thing, just delete the app from your phone. Don't look at it. Just keep on dollar cost averaging, automate your investments, check back your portfolio in a few years, and you'll be good to go. If you enjoyed this kind of videos and want to see more of it, make sure to give it a like, subscribe to the channel, helps out a lot. Next up, check out this video over here. As always, thanks a lot for watching. Stay healthy, get wealthy, and see you in the next one. Ciao.